Hello and welcome back to this Friday edition of Crypto My God, episode 28, and today I'm going to be talking all about Bitcoin. It's just having its time, and it's pretty wild because it's the first of the crypto assets, and it is just slaying it in contrast to everything else. I honestly wish I spent all my time just accruing Bitcoin instead of chasing some of the other narratives. What are you going to do? We're here now. So let's get into it. There's a lot of major news coming from really large players these days about Bitcoin, and here we're seeing that breaking. State Street and Citibank launch a Bitcoin and crypto custody, according to the information. This is also coming from Bitcoin Magazine, just to cite my sources, but this is pretty wild. If you recall from a previous video, I talked about the repeal of SAB 21, and that meant that there was an open season for custodying Bitcoin. The banks are full go on it now, and we're seeing them come in and move. We have major traditional finance, sophisticated players like State Street and Citibank about to custody Bitcoin. Now, previously it was really only Coinbase that was holding it. I know they had blowout earnings yesterday, but maybe their moats kind of disappeared. It's really unclear there. And of course, we go on a little bit further, and we have even more from Bitcoin Magazine, just kind of crushing it with all of these headlines. Breaking: State of Washington Investment Board discloses $321 million in Bitcoin ETF holdings. So this is pretty nuts. We've seen the Bitcoin reserves start to extrapolate towards states. Obviously, there's one at a national level as well. And remember that Van Eck assumption that came out yesterday, which said that if all of these states and the nations were to start buying in the way that they are advertising, we're looking at an over $200,000 Bitcoin. So this is all pretty significant. And then just to keep it going, coming from Wu Blockchain, we have the Abu Dhabi Sovereign Wealth Fund purchased $436 million worth of ETFs in Q1. This fund, called Mubadala, is the wealth fund and the reserve for Abu Dhabi itself. They deploy into a lot of interesting assets, and we can see that they're taking advantage of the Bitcoin ETFs. So this is very big. You know, we're starting to look at close to $1 billion here of Bitcoin ETF purchases coming from major players. Pretty significant. Coming from Umla, we can see that we are pleased to officially formalize our partnership with Avalanche through the ceremonial signing in Leap. What this is Saudi Arabia announcing the launch of their own L1 network, assuming that they're going to create a digital-based currency inside of their country or a point-of-sale system, transaction system. That is what I believe this Layer 1 blockchain will be used to facilitate. Avalanche is an EVM, Ethereum Virtual Machine compliant network. However, it has a really unique capability of spinning out app chains, so specific layer ones that can all interop with each other in a really convenient and easy way. So that means that we now have Saudi Arabia with their own L1 on the Avalanche network. We just recently got Gunzilla Games, which is a AAA Unreal Engine 5 video game. Pretty cool. It's free to play. If you have a system, go get it. As well as tons of RWAs and real world assets being built on top of Avalanche. So this is neat, a little bit of a detour from Bitcoin. But of course, as we get back to the orange coin and everything that's growing with it, I did get a cool piece of information from a friend earlier today, which is about the Stacks network. So Stacks is actually a Bitcoin L2. Basically, Bitcoin miners decide to run Bitcoin, and they also operate Stacks. And they actually have to lock Bitcoin up in order to do the proof of stake provability and validation for Stacks network. This means that they're taking that asset and they've actually built a yield-bearing mechanism around Bitcoin. Stacks has been around for a long time. I want to say it launched in 2019. They've done some really interesting things in the regulatory space. They legally converted to decentralized from a centralized asset, and they've had their own asset, STX, which could be staked to earn SBTC. So all of those people locking up the Bitcoin and securing it could earn Bitcoin rewards. Basically, the miners, as they're mining Bitcoin and locking the stacks, some of that mined Bitcoin goes into the Stacks network. So this has been a long-term play for how to accrue more Bitcoin in a yield-bearing capacity. But I just learned today that Stacking DAO, and previously you could hold stacks and you could earn some Bitcoin, but they've recently come out with a liquid staking model, and you can take their, very much like the Lido STETH, you can take a STX Bitcoin, which is a liquid yield-bearing asset, and actually now with one click earn 7% APY. So this is pretty cool if you want to look at it. This is Stacking DAO on the Stacks network. I'll keep links to it. For what it's worth, I'm not really a Stacks holder. I do think the technology is really interesting, and if you want to get orange pilled or sucked into the Bitcoin world really deeply, I do highly recommend that you look up their CEO, Munib, who will just make you believe in Bitcoin to the core. So all of this is really bullish going into the weekend. It's looking like we have a lot of momentum around Bitcoin. And of course, as Bitcoin goes, so does the industry. And this is all really exciting. With that being said, guys, have a great weekend, and I hope to see you next week.